Hello, good morning everyone. Myself Ayappa City from International Business Management course. Today in this PPT we are discussing about the analysis of financial and operational performance across the organizations, a statistical review of a Q matrix. Um, in introduction, this report includes information on the balance sheet and other quantitative data of 100 organizations in different industries of the year 2012 to 2020-21. They included turnover, profit margin, returns of shareholders' funds and shareholder funds, and number of employees. Mm, The report report analysis descriptive statistics visualizations, correlation analysis, and regression analysis to determine the factor that may affect organization performance. The results are informative on the state of the financial health, operations, and profitable and would be useful for policy making, researches, and strategic managements. Moving to in this slide, we see the data overview. Mm, The data set includes 100 observations from 10 different organizations with 5 key variables: turnovers, gross profit management, gross profit margins, return on shareholders funds, and number of employees. Those variables are from 2012 to 2020-21. The turnover of sales range from 32 lakhs 50,000 to 11 crores 20 lakhs, and the profit margin is from negative 58.21 to positive 31.87 percentage. It changes within a range of minus 51 to 82 percentage to 110.39 percentage. From return on shareholders funds, while shareholder funds may research from losses to more than 1,240 millions. The number of workforces is as follows between 19 to 4,143. Their variables from a wide range of financial and operational performance measures that make sure it is easiest to conduct a variable analysis. And coming to next slide, descriptive statistics. In this descriptive statistics, the data set has 5 variables and includes 100 of observations from which of number of each variable are given. The year is from 2012 to 2020 2021, with a mean of 2 2016.50. Turnover ranges between 3.25 million and 1.12 billion, with a mean of about 210 millions. The turnover profit divided by the net sales and profit margin. The way varies from minus 58.21 percentage to plus 31.37%, plus 31.87 percentage, and has a mean in of 2.29 percentage. The average return of the shareholders funds discounting all industries is 13.94 percentage with a maximum of 110.39 percentage and a minimum of minus 51.82 percentage. Shareholders funds vary from negative value, meaning that companies is in loss and has a value of 1.24 billion and the median is 105 million. Finally, the number of employees begin at $19 and end up the $4,143. with the average equaling the $776 in light of those figures. The appears to be significant and validated in the financial and operational statistics across the set of the observations. Coming to next slide, visualization. The simple histogram repeats in an average profit margin and its disruption and gives a general view of the economic value. The set of the visualization shows the main financial indicators of the organizations. The simple histogram shows the average profit margin by the organizations and distributions of financial performance. Main turnover is presented in a basic line graph to show a comparison and characterized and various organizations. The pie chart displays the total of employees in respective organizations with which will give you an idea about the workforce distribution among the organizations. Finally, use a simple area graph and the trend of the mean return on shareholders' funds is respected, emphasizing the aspect of profitability for each organizations. Altogether, those graphs give a clear picture of the organization performance in the different fields. Coming to next slide, correlation analysis. Correlation analysis illustrates lean relation between the main variable in the dataset. Turnover is directly related to the number of employees. It means the bigger firm need more employees. However, turnover has a negative but insignificant correlation with the profit margin and return to the shareholder funds, implying profitably issues a frame increases in sizes. Coming to next slide, regression analysis. In this slide, the regression analysis reveals a strong model fit with an R value of 0.804, indicating that approximate 80.40% of the variation in profit margin is explained by the production predictors. This pattern are evident by the turnover, return to shareholders funds to profit, shareholder funds and number of employees. The obtained R2 0.647 means that the share of the explained variation in the profit margin researches 64.7%, and the adjusted R2 is equal to 0.632. The statistical significance test of the model is accepted since F 43.537 is greater than F tab 2.53 and P less than 0.001 as shown in below. Coming to next slide, key insights. This output important find the understanding as a result of the analysis of the UK budget airlines industry. The results shown in the organization performance vary greatly in absolute terms and as a percentage of the benchmark value of the key financial indicators. The correlation between the turnover and profit margin is inverse the negative conflict of minus 0.213 significant at P equal to 0.0333 implies that the higher than level of the turnover, the lower and the lower the level of the profit margin. On the same note, the coefficient of the relation between the profit margin and return on shareholders funds is 0.425, meaning the firms in the banking industry enjoying the high profit margins also get good returns of the shareholders' funds. The positive relation between the turnover and the number of employees is captured by a correlation coefficient of 0.835, indicating the large organizations are like to have a correspondingly high turnover, which would be suggestive of positive scale economies. Coming to recommendations, UK budget airlines should attempt to increase the availability of extra funds with the cost significant cost signature of raise profit margins as turnovers rise to boost profitability and efficiency. Managers should make efforts of improve profit margins beside turnover because the later turnover is equal to the range of 3.25 billion to 1.25 billion may be attained by bringing on in profit. More attention should be paid to the factor inflect operations and cost control and an increase of profit margin from 58.21% to 31.87%, creating worth for shareholders through the higher returns on shareholder funds. Coming to next slide, limitations and further researches. There are the certain factors which could have an impact on the study. First, the data is cross selection and collected over 10 years. This with a significant facility to derive long-term trends. Second, it is a simple financial model which only consider a selection of financial factors as a potential denominators of capital structure. The reminders of market conditions and competition or other characters of industry selectors may be omitted in the process of analysis. Coming to the next slide, conclusion. This project involves in the data analysis of some important financial and operational variables involved in UK budget airlines to establish profit, human, productively, and shareholders. This analysis affords such organizations useful information in their financial and operational audits. The study finding the reveal direct relation to turnover, profit margin, return shareholders funds, and number of employees. According to the regression model, turnover, the return on shareholder fund, and the number of employees predetermine a sizable extent of a variation in profit margin 64.7%. There is a high correlation between the turnover and profitable and the size of the workforce, and organization should also look at managing profit managing profit margins and shareholder returns. Further work could check for the predictors and use time series data to get more insights into the business performance. Next slide, there are the references here. Thank you.